Hello, everybody, and welcome to this week's episode. We're diverting a little bit from our format that we usually do, but not too much. We have a real hot on our hot list, but first we're going to get to the big boards. Then we're going to cover our hot list, and then we're going to talk about our news today. But the diversion that we're doing is we only have one hot ticker, no not tickers, and we just happen to have the founder and CEO on with us today. Stani from Aave, ticker is LEND, Lend, doing some really big stuff, especially with the migration. But listen, let me introduce everybody. Got my co-host Ryan Gorman, the best hair in crypto. I got our analysts CJ, Reichel, and Matt. Monty. I don't know why I call him Matt, who's coming from a steam shower somewhere, from marketrebellion.com. I got Rob, who everybody knows and loves from Digital Asset News. And of course, we have Aave. I mean, Stani, you should just change your name to Aave. That would be kind of cool. First, we're going to hit the big boards. Guys, let's just jump right into it. What are we seeing from Bitcoin and Ethereum over the course of the last week?
Yeah, well, it's been a pretty wild couple of days here. I mean, we've had a huge run up to above 11K. A lot of people thought that Bitcoin would see some pretty staunch resistance at 11K, but it kind of just broke right through that, and we're settling above that. But for me, this isn't. I don't want to jump for joy just quite yet, because we have seen formations like this in the past. And for me, I think the biggest resistance level is going to be 11.2K. So if we look all the way back at September 19th there, we have a similar green candle. It's that green 2 candle that also tested 11.2K. And as you can see, the next 4 days, we had a sharp sell-off. Obviously, this is different because that green 2 was kind of preceded by a 9 candle and also 2 doji candles. But I think 11.2 still stands as very strong resistance. So for me, I'm looking out to see if Bitcoin can break above 11.2 and a candle can end above then. Until then, I'm very wary because I'm watching out for a sharp reversal like we did see on after September 19th. So yeah, I'm just going to watch to see if it breaks above 11.2K, and I'm just kind of waiting right now.
Is the 11,000 mark, which I mean, gleefully we all saw today surpass. I mean, is this positive momentum for you, or are you thinking that if it doesn't get to the 11.2, we're going to have some sort of correction?
Oh no, this is definitely positive. This is definitely positive. But the thing is, it can be misleadingly positive in the sense that too many people jump on board thinking that it's broke above a very critical resistance level, and then the bears use this as an opportunity to drive the market back down. I think that's exactly what happened on September 19th, is it broke above 11K and immediately shot to 11.2. And that sort of overexuberance cost a lot of people a lot of money. And the bears corrected the market immediately with that really steep drop.
I think this time, though, it feels a little different, right? Because there was some big news this week that we'll get into later in the episode, but there's also, individual wallets have kept going up and up and up, and they're at an all-time high, compared to where they were, especially on September 19th. It just feels like there's more momentum, that sentiment is different, and that we are pushing higher, almost not necessarily for a parabolic move upward, but, just a more longer-term sustained run above 11K, no?
Yeah, I think Ryan's right. And the one difference, not only in news, but also in technicals that Monty talked about a little bit, is that this one was preceded by a green sequential 9. And if you're unfamiliar with the sequential indicator, 9s have a tendency to highlight when the trend is nearing exhaustion. And so that's kind of what led us to this false breakout to whatever it was, 11.1 or 11.2. The only thing that's different this time around is we're building momentum earlier in the trend. So as you see here, we're only on a green 5 candle, which means that there is likely more momentum left in the trend. But I agree with Monty in the sense that waiting for confirmation above a break of 11.2 is definitely the more conservative and more probabilistically favorable trade.
All right, very cool. Well, what do we have on Ethereum? Is it correlating pretty well to the BTC, or are we looking at something, some divergence of any kind?
So I'm actually a little bit more bullish on ETH right now than I am on Bitcoin in the short term. Not only because of the technicals, but just because of this DeFi boom that's happening, and I really don't think that's over yet. But right here, if we just look at the technicals, I think this is a very bullish indication that Ethereum has a little bit of room to run here. So we had that that red two that it looks to me like a reversal candle, and then we had two strong follow-up candles after that. And what's most important for me here is that there isn't much resistance above this level. So I think Ethereum really has some room to run here, possibly up, like CJ's highlighting, up into that range of about 400. I would say more realistically, in the short term, maybe by next week we could hit 380. But yeah, I think the lack of resistance above, as well as with all the bullish news in DeFi and the bullish news in crypto that we're going to talk about a little bit later, that makes me very bullish on this, and I'm excited to see where it heads in the next few weeks.
There was an interesting article, I think it was today or yesterday, rather today, in CoinDesk, where the author compared Ethereum to Manhattan, and everyone's moving to the suburbs. And the idea here is that DeFi might be booming. Great title, by the way. DeFi might be booming and bringing Ethereum with it, but because of the lack of bandwidth and the load on the network, only the most liquid protocols will be able to survive, and that ultimately will be a barrier to its further growth. Do you disagree with that train of thought, given how you're looking at where the price might move over the next couple of weeks or few weeks?
No, I definitely agree that that is a possibility, and I really like that metaphor. But I think that's something that is still a long way off. And I think in the meantime, Ethereum is gonna serve as like the foundation for all these projects to pop up. And I think for that to happen, we're gonna need a lot more time and, like you said, a lot more projects with that sort of liquidity. So I think Ethereum will be the base for a long time to come. And that may happen eventually, but I don't see that happening anytime soon. So in the meantime, I still plan to ride this upward.
Gotcha.
And good points. I see it like this is the thing about YouTube and traders and investors. You'll see channels talk about trades, and they always talk about this is what's happening, and it's pretty much short term. And then people are like, oh, this is a short term thing, but they hear it as a long term. Investors are kind of like the opposite. They hear traders talk about it and they get confused. So on this situation, like both of you guys are both correct. I think in the short term, Ethereum's got a lot of room to run. It's going to be a great project. However, I see it just like what Ryan talked about. You know, there was this articles. There's also another article that just came out talked about ETH 2.0 being delayed by up to a year. So that could be a big thing. I mean, let's be honest. Look what happened with DeFi over the last 4 weeks. Do we have 2 years for everything to catch up? What's going to happen in 2 years? Where does everything go? So article I talked about was there was a project, Singularity, which they're the ones that do AI. They have that freaky looking robot thing. And they were doing everything with Ethereum. They say, you know what, we can't wait for this. And we don't know what's going to happen. So we're going to jump ship to Cardano. And you see these types of things happen and you're like, wait. Is Ethereum the solid bet? Remains to be seen. I'm bullish on Ethereum, but I hedge my bet with other different projects.
Is there like, aside from bandwidth on Cardano, is it easier to build a project on there, or is it easier to build one on Ethereum? Because I could see projects starting on Ethereum, establishing themselves, and then perhaps moving to Cardano if that's the case.
In my comment section, I hear it all. I hear Tron's the best thing to build on, but really the person to ask, like somebody like Stani or somebody like Hashoshi, who's actually a developer. I have no idea, but I do read the reports, and the big thing is like the gas fees are super high, transactions per second. We see how low they are. Vitalik is talking about pushing it to 100,000 TPS. Cardano's doing the same thing with Hydra. Who knows if that's actually going to happen? I can't even answer that.
Stani, any insight on that?
I mean, yeah, come on. Let's introduce the creator of the hot list today, Stani.
Perfect segue.
Great segue. Who's the founder and CEO of Aave, and I mean, Aave is just doing a lot of positive. Okay, tell me if I'm wrong, Stani. 1.5 billion in locked up value.
Yeah, roughly. It depends on the valuations of the assets, but basically 1.2 to 1.5 billion worth of assets locked in the smart contracts. Yes.
Third largest.
Yes,
Right.
exactly.
I
For
mean,
the DeFi protocols, so it's quite fascinating.
so you know, it was great. We love every week talking about the various stickers that we think are outperforming or have motivation for a higher value. But I will tell you, it's a treat for us to actually talk to one of the founders about it. And I know that there's a lot of questions to be had on it from both Rob and Ryan about the different use cases with the Aave DeFi coin, which is going through a big migration into the Lend ticker with all the various major exchanges and players around the world. But first, before we pick his brain, and I want to go back, Rob, by the way, to the Ethereum use question that we were about to throw down there to him. But CJ, Monty, let's pull up Aave's chart. Let's take a look at where this puppy's going from a technical perspective and a market momentum perspective.
We've had quite a run, right? So very nice bullish momentum all the way up through September. Now you can see we've retraced a little bit. But what I like to see in terms of bullish support is the fact that the bulls have actually kind of been able to hold this support level, which comes from this previous setup 9. So each time a 9 occurs on the sequential indicator, it comes with like a setup trend line, and that acts as either support or resistance depending on whether, if not, price is above or below the actual setup trend line. So the fact that we have support from this 9, very promising. Now, we are on a red 6 sequential, but tomorrow, if we remain at this price, we'll see a price flip to a green 1, which is foreshadowing of further bullish price action. And you can really see it coming off this like hammer candle, really coming up nicely with bullish momentum. The only thing that I would say I'm a little bit hesitant on to get into a trade is on the 1 hour chart here. We were on a 9, or we are on a 9 for the next 9 minutes. And, you know, one thing that I'll show you that I ran into yesterday on a put option trade is, as you can see, when we go to the 9s, we have a tendency to reverse only just even temporarily. So for instance, this is a stock I was trading Sunrun, same thing on the hourly, except this one's a red 1 to 9 candle. But as you can see, once we kind of hit the reversal of that trend, we get a nice little pushback. And so unfortunately, I kind of want to wait to see in the next 2 hours what happens to this 9 candle, whether we get a couple % down for maybe a possible bullish entry. So watching that, I really like these bullish green candles on both the 4 hour and the 9 and the 1 hour. So very promising in the short term.
Okay. All right. I mean, you know, let's get to the questions. We have a lot to ask him in a very short period of time. It's Friday evening almost here in London, where Stani is. So he's gonna wanna either code or hit the bars.
Sure, Alex. One question I had is people are watching the Lend token and watching its performance. It's soon going to migrate to Aave. Can you tell us a little bit about what that will mean in terms of the tokenomics and how Lend holders will make out with that migration?
Yeah, totally. And just a disclaimer, I will basically talk more about like the technical aspect and related to the like the token economics and kind of like how it supports the vision of the Aave governance and so forth. So don't take this as any kind of advice or anything like that, but just as a community vision. So what's interesting here is that we started the project a few years ago, and currently we're migrating the LEND token into Aave token, which technically means that we have this so-called Aavenomics paper, which we have this kind of like a token structure where we're using the token to provide safety for the protocols. So one of the issues in DeFi is that creating smart contracts is very difficult in the sense of keeping the contracts very secure. And this is why we kind of get a lot of benefits from smart contracts. For example, we can create non-custodial services, we have the transparency and so forth. But one of the kind of drawbacks is that then the code needs to be developed in a way that there's no bugs. And when people develop code, it's still always difficult to, it's always prone to errors, even if you have audits. And what we're doing is that our, the Aave token is a governance token in the sense that the token holders are making those kind of like risk-based decisions on, let's say, what kind of risk parameters the lending markets that we have can have, for example, depending on the collaterals and so forth. And because they're deciding on those things, they're transferring the risk to themselves by staking into this safety module that we have. And by staking, it means that they take their Aave tokens, put it into a stake, and they get rewards for it. So they get more Aave as a rewards. But at the same time, they subscribe into a risk of so-called shortfall event. So let's say if there is a hack or a bug, or failed liquidation, the token holders basically could get slashed up to 30% of their stake. And the idea here is that we kind of use the token structure in a way to provide safety for the deposits and get more adoption. So technically speaking, it's a kind of like a way to get the community involved and have skin in the game. And that's like the kind of like rationale why we have to do it. And the token migration is because if the stake doesn't cover, so if the deficit is way higher, then there is this passive mechanism where tokens can be minted in the same way as the MakerDAO maker token has. And this is called so-called protocols, kind of like a recovery issuance. So the idea of the whole token economics is just to ensure that the depositors, they have this kind of like an insurability there.
Gotcha. And I guess back to that question I asked earlier, because I noticed that you're going to have plain Aave alongside an Aave ETH pair. Is there anything that would potentially make Cardano more attractive than ETH, or is ETH pretty much the go-to pair for the foreseeable future?
Yeah, so what's interesting about like this whole like DeFi became very popular recently and for many reasons, but basically what we saw is the congestion, and I've seen the congestion for been developing in Ethereum for 4 years multiple times, and I think like the issue is that people are using the very same kind of like network. It's kind of like everyone wants to live in the same city, even though there are better places to live, like in terms of like less traffic, like, and I think the same applies to very well into blockchain and on-chain economies, because you actually don't need to, be in the main Ethereum chain. You could take your business into the second layer, for example, or another alternative blockchain, and all of these connectors could actually ensure that liquidity can move from one chain to another. So I think the current problem is that the whole ecosystem is built on Ethereum, but it should be like more wider. Aave as a project, our headquarters is always like on Ethereum, because like we were born and raised here, but we also understand that there's opportunities elsewhere and communities will be born in other chains. And it's interesting to see like how of those network technologies will actually evolve from where they are now and how the communities will be built. Because like I see that one of the models that many think is that you could copy everything that is on Ethereum and put it in another chain. But I don't believe in that. I believe more that those other like blockchains, their own communities will create their own products and kind of opportunities, and they will look different. And that is why that's what will make those communities interesting.
Gotcha. I know Rob had quite a few questions from his viewers, so I'll let him get to those for sure.
Okay. Hey, thanks. Stan, hello. Great, great explanation. I appreciate that. So let's go back to what you originally said. And you had talked about the governance token being Aave. And it seems to me, and then you said, like, if there's some type of event, some type of windfall event where you have to cover some type of losses, then it's the governance token gets hit, and it could be slashed by up to 30%. So it sounds to me like it's kind of like community insurance, where everybody puts their money in, and then something bad comes happen, like, hey, everybody, you get hit for 1/3. Is that kind of how it is? Okay, that makes sense. The next part you talked about, well, you said if it goes beyond that, let's say it's a black swan event and something just falls to the ground. Now you have to do some type of printing. So how much and what is the max amount of Aave that you could actually print in those situations? Or is it unlimited like the Fed? No, I'm just kidding, not like the Fed.
So basically, technically speaking, it's there's no cap on how much you can print, but like it's more about the governance, how they decide. So what could be like the maximum of you could do. And I think situations where you can print unlimitedly will not be in any case sustainable. And also, like, the governance can also update the smart contracts in a way that, let's say, if they want to put a cap at some point, and currently there isn't this kind of like an ongoing inflation, which, for example, Ethereum has and Bitcoin used to have, which is interesting model in some cases. But I think it's the coolest part about the Aave system and like the smart contracts and everything, and the being a governance token, is that, like, it's all up to the governance. They can decide whatever they want. They can come together and they don't need to listen to the team. They can build their own things. They can create they control the Aave treasury. You know, they can give grants, get more developers to build things. And it's kind of like, if you look at Bitcoin and Ethereum, like how many people are contributing into the software. And we want to achieve the same, that there's, like, I could imagine in future, there might be even a couple of hundred developers just have left their footprint into the Aave protocol. And that is like what we are trying to achieve, that anyone can contribute and token holders can decide whatever they want to do without actually team involvement. And I think, like, when you look at decentralization, I think, like, a project is decentralized enough when a community can make a decision that might not be favorable for the founding team, but it passes. Then it shows the strength of the community actually in that sense. So it's interesting to see, like, how governance tokens will play out.
One quick
Go ahead, Brian.
back on what you just asked about the ecosystem reserve and decisions that could potentially be adverse to the owners of the project. How much of a percentage of Aave's token allocation would be allocated to that reserve on an ongoing basis?
I think currently the Aave reserve is somewhere, let me quickly calculate, is it like 10% or something like that? It's not much, but it's kind of like it's a good start to cover. Let's say if the Aave community wants to get more teams to build on top of Aave, or create new grant programs, or reward some kind of a behavior. So now the safety module stakers are rewarded with Aave. I could imagine in close future it could be Aave never had the Aave protocol never had a liquidity mining programs at all, but that could be something, and which is funny because we have been very successful in still, and but those could be added if they are sustainable. So the whole idea of the Aave governance is always like the being as sustainable as possible, and that leads also into this kind of like why we choose this kind of like token structure. And kind of providing safety for the protocol, because if we would have, let's say, liquidity incentives for depositors, we will also want to incentivize them to stake into the safety module and provide safetiness as well, so that the governance incentives are aligned towards the safety. Because last thing you want is that you have one group of people who are basically providing the safety and kind of like vouching for safe protocol and incentives there, and another part of the group are basically vouching for higher returns for depositors for actually bringing the liquidity. So this is something that we are trying to kind of like somehow arrange in the governance.
And in that reserve, that's completely controlled by the community, correct?
Exactly. So the idea, and also not just that reserve, but basically the community can actually control everything. So every decision making, anything, like we as a team, we participate and our goal is to in future continue building the protocol, not all the parts, the most challenging, important parts where we bring the most value added. So one of the things for me personally, and it's important that when you have a ready-made protocol, that you still have the people who actually build it from the very beginning, participating and continuing building it, because it's kind of like, if you think about it, let's say like open source software, let's say like Linux, and Linux Torvalds is still developing the software and participating there, and like in various different roles, and that is very important of the success of Linux. And we see the same trend in other like open source software as well. And this is why I mean, we have the knowledge, but we also want to understand, I mean, acknowledge that there will be other people building, and that's the part of decentralization, and it's only good for the protocol.
Awesome. Makes sense. All right. And then
what else you got, Rob?
What else I got? Okay. I'll try to make this fast. So I put out a question real quick, a little poll on the YouTube channel. And I said, hey, I'm going to go talk to with Stanley from Aave. What kind of questions you got? And they said, here's what we have. The first question was, when will Aave support mortgages? And this is a big thing, right? 15-year fixed, 30-year fixed. Because the problem with some of the other platforms is loans 1, 3, and 5 years max. So, Stani, what do we got?
Yeah, one cool thing about the decentralized protocols is that, once you deploy them into a blockchain, whatever blockchain it is, it lasts as long as the incentives on that blockchain works, and the network is upheld. That means that, let's say the Aave protocol, it lasts as long as it could be. So you could take a loan today and it lasts as long as you close the position and you have enough collateral and so forth. But in terms of like kind of like long periods, because the idea of the question is kind of like, these are pretty much like like loans for, let's say, unlocking capital, from your long positions, or loans to leverage or something like that, right? And how we could actually get people to put value that is more long term, like mortgages. And this is something that we're working with a couple of projects. One of them is Realty, and we want to basically tokenize the properties and also make the mortgage process on chain as well. One of the challenges is kind of like the regulation. So we are trying to find a structure that works in the sense that, because when you tokenize real assets and properties and that kind of stuff, in the issuance part, you have some regulatory kind of like things involved, because basically you're issuing those kind of like asset-backed tokens, and it requires a lot of work. But I think like in a year or so, we might see some interesting progress on that space.
Yeah, that'd be huge. I mean, if you're able to tokenize a property and then put it on the blockchain and then give loans against it, I mean, that'd be enormous. Like my wife makes loans for different businesses, and then we also buy properties. So if we can have something like this without jumping through the hoops, because I don't know if you've ever gone through the hoops, and it's expensive, because when you have to sit down with the actual mortgage broker and you look at the little fees, you're like, where did these fees come from? What is all this? What's going on? And before you know it, you're like, I can't believe this actually happened. So Godspeed to you, Stani. Hopefully you can get it all worked out. So that was that one. So thanks for, what about, and I guess let's go to the next one. Will Aave support longer term loans? Sounds like you will. And then here's the other question is, why are the deposit rates or API low compared to others?
Yeah, exactly. So basically, I think one of the things is that we don't have like basically this like liquidity mining incentives where when you have those kind of things, those platforms are calculating those yields as also like percentage that you get. And for us, we don't do the same, because for example, when people are staking Aave into the safety module, we don't calculate like the annual returns or nothing like that, because we don't believe that the Aave token is cash flow. We believe it's a kind of like a reward and taking a long position for that. And kind of like that is something that most of the lending protocols have, that they basically have this liquidity mining, and they calculate it into the interest rate. And second thing is that over the time, when the risk becomes low, I mean, the risk is becoming more lower, so the reward is more lower. And our goal for that is that we are going to open new markets where there's different kinds of risk appetites, and that will mean that there will be different yields as well. So there might be something that is slightly less riskier and something that is slightly more riskier, and then we will see like this kind of like an interest rate game within the Aave ecosystem.
Gotcha. So last two, did you look around at all the different DeFi projects and go, okay, we don't want to do that, we don't want to do that, we don't want to do that? Because there's a lot of projects out there that really just went belly up. Not belly up per se,
Yeah.
but really did fail.
Yeah, a lot of fail. Like it's okay to fail if you're building things and you're trying to build a product and a business model and you know a community, and you're trying to embrace the technology and the good parts like the transparency and the custodial aspect and so forth. But when you're doing things in a very kind of like bad way, you're deploying code that is not secure, you're anonymous, you know, in a good way. You can be a good anonymous, but the thing is like I've seen a lot of projects that kind of like I don't like in the sense because they are they're not like endorsing the right things, which is like for me, which is important is the transparency and you know like the custodial aspect and deploying secure code, because people will use the even if it's decentralized protocol, people will use it, you know, and you need to deploy code securely. And that is one of the things that I don't like when there isn't any audits or due diligence on the code or like any disclaimers or anything like that. So that is a big turnoff for me. But there's a lot of good projects. Like if you look at DeFi Pulse, the top projects are pretty good. I mean, they're like doing a lot of work, you know, in terms of like security and so forth. So I'm pretty proud of that part of the space. Yeah.
Gotcha. And the last one, I got to ask this. I ask this to certain people. What's your best Aave elevator pitch? Because like everybody's got a pitch. Like, you know, because I'm trying to like explain Bitcoin to my friends who have no idea. Yeah. I'm like, you know what? I go, just make it simple. Bitcoin is digital gold. And yeah. Unlike gold, it is finite. I can send it to anyone, anywhere in the world for next to nothing. And I can do it super quick. It's used to cost a nickel. Now it costs about $11,000, and it's why I'm heavily invested into it, or something like that. So like
pretend you're trying to explain it to my mother so that she understands it or something.
Yes.
Yeah, definitely. I mean, like for me, Aave is basically a permissionless savings account, which means that anyone in the world could just, you know, by pressing a button, they get access to USD nominated savings account, you know, despite what situation they have in their local currency, what is the inflation there, what is the system with the banking. And I think that's very powerful because you actually don't need to deposit into Aave to basically get this kind of like a yield. So you just need to, when you deposit into Aave, you get this A token, which is this kind of like a receipt of your deposit, and you can just buy it openly. And then you have this savings account. And I think this is like very important when we think about finance in general.
Got it. Crypto savings account, way better than the banks as far as APY. Excellent.
Yeah,
absolutely.
That was helpful and simple. I think I understood it on that go around. CJ, Monty, any more questions before we move on to the big news of the day?
No, thank you, Stani. It sounds like a really cool platform.
Yeah, definitely.
Sure, absolutely.
Now, but,
thank you all.
Well, let's get on to the last segment of our show, which is the news article of the week that has interested us the most. And for this week, it has to do with Square. And it has to do with Square and them buying $50 million of Bitcoin out of their holdings of fiat and taking a move in the direction of MicroStrategy. Now, not only has this news been helpful, a propellant to the market for Bitcoin, but also it's starting to create a trend or hopefully even a precedent. So, you know, Ryan, go over this. What happened and what are the details?
Sure. So earlier this week, yesterday, Square, Jack Dorsey announced they bought 4,709 Bitcoin worth about $50 million. That's 1% of their total corporate fiat holdings. And, you know, Jack Dorsey has been a longtime supporter of Bitcoin. He's opened patent alliances. He's dedicated an entire team at Square to contributing to the Bitcoin open source network. And during 2018, he said that he believes within a decade, within 10 years, he sees Bitcoin becoming the world's single currency. He's been a huge proponent of it from the beginning. And, you know, this is just another step in that direction. When looking at the broader trends, right, if you're thinking about this, MicroStrategy bought a lot of Bitcoin, well over 400 million worth. Square buys 50 million. I think there's another much smaller publicly traded company that also bought Bitcoin into their treasury as well. I could be wrong, but that brings to a total 3. There are trillions of dollars worth of corporate money in treasuries being held around the world. If 1%, if each company put 1% of their fiat holdings into Bitcoin, the total impact on the price of Bitcoin would be astronomical. And that's if they only did 1%. So
we wouldn't be doing YouTube shows anymore.
No, we'd all have islands. But like, look at a company like MicroStrategy. There are other companies out there who will definitely put more than 1% in. So, I mean, this has got to have contributed to this move upward, and that's part of what I was saying earlier about there being more support, more sentiment, and it looking like there's a more long-term bullish trend in the markets. This is a huge story that is going to have impacts that radiate far beyond just this week.
Yeah, it's exciting stuff. And Rob, I know you've covered this over at your channel, Digital Asset News, and the clip section. I mean, you've been a cheerleader of MicroStrategy doing their bit. What are your thoughts on Dorsey jumping in?
I gotta be honest. I didn't even cover it yesterday, and people actually were like, how can you not cover that? What it was? I was like, look, Dorsey's always been a cheerleader. He's always going to be there. Is it shocking that this actually happened? No, not really. I mean, if Bill Gates came out and said, you know what, we got a lot of money and it's on fire, we got to put it in a big, huge. However, I do see what Ryan is talking about. It's just another snowball picking up steam. That's not a word. A snowball effect where it's rolling downhill. Now, first you had MicroStrategy. Ryan said there was another company. I forgot the one too. And now you've got Square. So I think what's going to happen is in the background, CEOs, CFOs, and even shareholders are looking and at the outside looking in going, hey, our money is melting away like ice, and we need to do something with it. We need to do something right now. So what are you going to do? Well, you got Bitcoin. Yeah, I mean, you also have gold. Let's put it out there. But Bitcoin has a tremendously bigger upside. It is an asymmetrical investment. And if they're looking at it, I mean, they should do it. I think what's going to happen in the next 1 to 3 to 5 years, all the different companies that don't put it in right now are going to look back and go, I can't believe I missed the boat. And the ones that actually did it, like, see, I'm a genius.
Also,
Agreed.
He was testing the waters for Twitter to potentially do this as well, right? Because he heads up Twitter as well, and they're publicly traded. He wanted to see what the reaction would be. Almost dry run for that, and then Twitter goes in as well. I mean, if you look at Square's revenue reported earlier this year, it's gone up 367% from a year ago just on Bitcoin alone, from 306 million to 306 million in 1 quarter. So, and he's saying that's a result of the active Bitcoin users on Square, which that's remarkable, that amount of growth. It's actually outpacing Bitcoin's growth itself. So I think that's another huge positive development that shows that there's an appetite for Bitcoin in the retail space that goes beyond just the fishbowl that we're all in.
Yeah.
Yeah.
Hey,
Sorry. Go ahead, Rob.
I was going to ask Monty and Seiji, when these stories come out, do you guys see like different bumps in all your analysis, things like that, or is it just kind of like cumulative and you just kind of look at those charts? Because like something like this is pretty big. The president tweeting out saying that he's going to go against the stimulus, and then of course he reversed it 24 hours later. But I mean, does these things are they reflected in the charts or not really?
Yeah. So you mentioned traditional markets and Trump tweeting. That's obviously affects trading and has messed up many of my trades in the past.
Yeah.
Not as much of a factor in Bitcoin and crypto. Just of course the traditional markets are correlated. A lot of selling in a market like that will spill into Bitcoin. But I kind of agree with you in the sense that, Dorsey has been a very big cheerleader for quite a while. I mean, the guy only has one word in his Twitter bio, and it's Bitcoin.
Yeah, that's right.
So not very shocking, but you could attribute that bump yesterday to Dorsey's news. But while news does move markets, at least from my approach, news is kind of an unreliable thing to base trades off of. Does not mean that news doesn't move markets, obviously.
Yeah, gotcha. Monty, same thing?
Oh yeah, completely agreed. And I think it kind of ties in with what we talked about last week with like the resilience of the crypto market these days. I think it goes both ways where like we see that news against BitMEX and we only see a 2.9% dip. And with good news, it's kind of the exact opposite. I mean, we get a slight bump, but it's not necessarily as significant as it would have been if the space was still a bit more in its infancy.
Yep, makes sense.
So I heard I saw an interesting tweet, and I wanted to bring this to CJ and Monty. So it basically said, you know something, Bitcoin isn't digital gold. It is now the digital S&P 500.
Yeah, that was
Yeah.
Feldman at Black Tower. Yeah.
Yeah. So that was, I believe that was the Block Tower guys going talking about it. But I mean, what are your thoughts on that? How do you feel? Truth to it?
You mean just the correlation in general? I mean,
Just
it's
correlation.
pretty obvious. It's there. I don't think it's going to last forever. I expect Bitcoin to outpace the S&P, I mean, drastically. It's a shock that we're even comparing them because their liquidity pools are such different. I mean, Bitcoin is so much smaller. Nevertheless, they've been very correlated with the overall market.
For
Yeah,
sure.
I mean, the thing is like money's money, right? And like when people are making money, they'll look for more ways to make money. And I think that has a lot to do with the correlation. But for me, I think Bitcoin will really show its true strength when it decouples from the S&P and starts trading more independently of it. Yeah, I think as of now, we're seeing this tight correlation because when there's fear in one market, there's kind of fear in the other. But I think once that changes, that will be a very bullish indicator for Bitcoin.
For sure, I definitely agree with you there, and I'm gonna just gonna wrap it up here. I know that Monty and CJ, they have their big online conference this weekend, the MarketRebellion.com trading conference, which, by the way, I know you guys definitely wanted to hold in Vegas like you usually do. So, but they got to get to work doing that with John P. Najarian over there. But guys, thank you for showing up on a busy weekend that you guys are having. Rob, always a pleasure. I like the new beard. If you don't,
I'm old.
know Rob,
I'm old. That's what happens.
head over. He has 2 YouTube channels that are just phenomenal and extremely informative with news. It's Digital Asset News and Digital Asset News Clips. Great programming. If you want to see more of what CJ and Monty do, they're marketrebellion.com/crypto. They are, all the information's in the description below. And if you want to know what hairstylist Ryan is changing to when he moves out of New York City, we'll address that on next Friday's episode. But guys, everybody, thank you very much for joining. Until next week.
Thank you, everybody.